Welcome back. So we have, as promised, Dipan Mehta now joining in with some thoughts. Dipan, great to be with you and good to have you on the show. So let's start. Where do we start? We have to start with Sammaan Capital, right? I'm sure you saw all the drama play out yesterday on the stock. Now, the company has clarified. They're saying, A, whatever the court ruled yesterday, whatever that order was, it did not say anything negative against the listed entity, Sammaan Capital. Whatever their issues are with the erstwhile promoter, Sameer Gehlot. And B, they're saying that we're still trying to get the deal done with IHC. We are continuing to sort of apply for all the regulatory approvals. You think this is going to repair the damage?
Yes, Shilpi, thank you for having me on your show and good morning. See, I think that certainly there is no connection directly, but Sammaan Capital has been a big value destroyer over the past several years or so. And some of the other controversy keeps cropping up over there. Of course, the ownership change is on the way, and that should improve the sentiment. But on the whole, I think its performance also has been quite disappointing. But only thing for Sammaan Capital is that it's really attractively priced. It is very, very cheap. And it's operating in an industry where there is good growth dynamics, considering that real estate is picking up and therefore housing loans also should do well per se. But let's see, I think if you're a deep value player or a contrarian investor and a high risk taker, then certainly you could look at Sammaan Capital. Because I think once things kind of settle down over there and the company starts to report steady earnings, the stock price can easily, grow by 30-40% because of better P multiples.
Okay, all right. Hi, Dipan. Good to see you, Ben. What about Adani Enterprises getting the asset of JAL, Jaiprakash Associates? It appears, as per what reports suggest, is they managed to pip Vedanta because of the terms of the payment. Not the quantum, but the terms, a higher upfront payment. That said, if this deal goes through, then what's your view? Ambuja Cements could be a potential beneficiary because they have low exposure, to central India. And Vedanta could actually be the lucky loser. Your take?
Yeah, good morning and thank you for having me on your show. I think, yes, there was some kind of concern amongst investors about Vedanta acquiring Jaiprakash, especially going into another kind of a business, which in a way is unrelated. So from that point of view, there is a sense of relief, but does show that the management is keeping on looking outside its core area of operation, which is not very positive. If they missed out on JP Associate, they'll buy something else. I don't know. That's certainly a risk factor when it comes to Vedanta Group. Especially coming back to Adani Enterprise, I think the stock is pretty much well priced. Look, it's a conglomerate. Many businesses are operating under a single roof. Difficult to track and analyze. But what I like best about the company is that once the businesses reach maturity, they tend to spin it off and actually split the company and give free shares to the shareholders. And that's a great value creating exercise from a minority shareholder point of view. So I would say that if I'm an investor in Adani Enterprises, remain invested. But from a fresh investment perspective, I think there are better choices elsewhere.
The other bigger question, thanks very much, Hormuz, for that, is whether this will put to rest nerves. Nasdaq is pulled back 7% from the highs, and will this Nvidia, which is the poster boy, put to rest the debate whether this, this trade has more to run or not? That question is tougher to answer. We'll only find out in the next couple of days. Markets are smarter than one company. It's collective wisdom. But I don't know. Dipan, do you have any thoughts here?
Well, I've also been reading Nvidia since morning. And all I can say, the first thought which came to mind is that if Nvidia was listed in India, its market cap would be 2.5 times its present market.
That's a nice one.
Trading at a 41p multiple. And in India, we would have given 100p multiple easily. So I think it just kind of reflects that how expensive our markets are compared to Nvidia. I mean, the company grows 50% and is available at 41 times, I think. And there are some people calling it a bubble. I don't understand. I mean, it just shows that maybe, we are extremely overvalued beyond bubble territory, or that these companies are really undervalued compared to our universe. So, but nonetheless, I think I wish there was some way Indians could buy such companies and take advantage of a relatively lower P multiple. The Max 7 trades at a P multiple far lower than most of our high-performing technology companies like, say, a Persistent or Tata Elxsi or even a KPIT, and much cheaper than some of our consumer-oriented businesses, which are anyway 70-80 times trailing 12 months or so.
Yeah, I think that's well put. Dipan, so the other one I wanted to ask you is IT services. The IT services index was up 3% yesterday. just a factor of under ownership, etc. Because I mean, it's still a very live debate whether this is, what is it? What will AI mean, and whether it'll increase productivity, but then, how much is it going to take a bite out of these companies and their revenue pies? Will it add to it? What are your thoughts?
No, see, Prashant, I've been tracking IT companies for last 35 years or so. And this is the first technology trend in last 35 years plus, which has completely been missed by the Indian software services companies. You go back to Y2K, internet, application development, remote management, all of these trends came and they matured, and Indian IT companies really rode that wave. But this AI, very, very perplexing that why it's not driving revenues. I think industry experts understand it better. And I think some of the investors also understand it better, which is why the P multiples of large cap IT companies are at all-time multi-year lows. So I want to avoid the sector. But look, there could be a trading rally at any point of time. It is cheap. The base effect will come into play. Order book position is decent. If execution starts for these companies, they could have a situation where for a few quarters, they start to report double-digit growth rate. But on the whole, I think it's not great from a long-term investor's perspective, and I would remain underweighted. But from a trading perspective, I think it may be poised for a 15-20% above a rally. That's certainly possible at any point of time.
Got it. All right. Dipan, always appreciate your thoughts. Thanks a lot for joining in, giving us some ideas on how you view it. And what stood out today was the Nvidia bit. Well put. I like that. Interesting one. Thanks a lot. Well,